Hello, folks. It is December 12th. It's Tuesday. It's almost 10 o'clock in the morning on the East Coast of the United States. In this video, I'm going to talk about gold. We'll be looking at some charts. Let me share my screen and we'll get going here. Let's see. There we go. I wanted to start by looking at the recent correction, price correction, and seeing if it was a global thing or if it was isolated to just the US markets. And so what we're looking at here, this is the Shanghai Gold Exchange, China, obviously, and their price for gold. This is looking at all data. And interesting, notice that regardless of how bad, how non-good the recent action feels, gold is still at all-time highs around the world. So, okay, yeah, not in the US dollar, but a lot of other places in the world, gold is at all-time highs. Obviously, China is one of them. If we zoom into just the last month of data, we can see that they experienced the same spike to a new high and then a dramatic pullback. And so the recent action was not isolated to the US dollar. Here again, this is gold in Canadian dollars. We're currently in the monthly time frame, and we can see that big spike and then a significant pullback. Let's drop down to the daily time frame, and so there we can see that was Sunday night, a week ago Sunday, big spike, new all-time high, and then a dramatic pullback. And so again, it was not just in the U.S. markets where this action occurred. Let me restore this chart. Let's talk about what was going on that Sunday evening week ago. So there had been 3 ships attacked in the Red Sea. And at the time it was presumed, or it was being stated in the media, that those ships had been attacked by Yemen Houthi forces with missiles, and that one of the ships was, or at least it was given the impression that one of the ships that had been attacked was a U.S. destroyer, U.S. Navy destroyer. And so anyway, geopolitical tensions were certainly elevated on that Sunday night. We had gold push up to the new all-time high in the US dollar. It was like 21.34, something like that, significantly higher than the previous high, which was like 20.80. So, $50 higher than the previous all-time high. So anyway, a significant new price. In hindsight, obviously, we should have assumed that on Sunday night, spiking into a significant high like that, it was reasonable to expect that the gold price would get whacked pretty hard. I didn't expect it to get whacked as hard as it has been, but anyway, this is the standard game. Gold spikes, or maybe doesn't even spike, but anyway, going into Sunday night, all of a sudden we get significant selling in the middle of Sunday night. These are the thinnest markets, thinnest meaning lowest volume of the week. And so if you were a profit motivated seller, excuse my voice, if you were a seller motivated to maximize profits, you would not wait until the middle of the lowest volume trading session of the week in order to sell whatever it was you were trying to sell. So clearly, when we see these kind of sales happening in the middle of Sunday night, Asian markets, we know that those sales are being executed for reasons other than making a profit. price manipulation, price control, call it what you will. But so anyway, we had spiked to a new high on Sunday night, massive selling overnight, price dropped Sunday night, dropped through Monday, and has continued dropping throughout the week. And so anyway, big pullback in price. We'll get to the gold charts. Let's take a look at what interest rates are doing. Interest rates are a significant contributor to the behavior of the gold markets. And so what should be adding strength to the price of the precious metals is this significant pullback that we've had in interest rates. This is yield on the 10-year note in the weekly time frame. Obviously, we pushed up into 5%, tapped that level, and now have had a significant pullback, 50% pullback, and appear to be bouncing from that level. We've got two candles now, and of course, this candle is still open. That's current week trading. But this last week's trading, that candle certainly looks like it could be a bottoming candle. You know, it tapped 50% retracement and then did a significant bounce from that level and left us with a very small doji. When we get a doji candle like that, what it tells us is, well, one of two things. The first possibility is that buyers and sellers, they duked it out in the markets, and neither of them was able to take control. Basically, it was a draw. And so we're left with price closing essentially where it opened. And that's how you get this very small body on a doji candlestick. The other alternative is that buyers and sellers duked it out in the markets, and neither of them was willing to take control of price. That the sellers weren't willing to push it lower, buyers weren't willing to push it higher, and so they end in a stalemate again. In either case, what we're left with is a doji candlestick looking like that. Good potential that that's a bottoming bar, candlestick, excuse me. And of course, now we've got the current week's action. Very low energy based on stochastics. Note that MACD is still in bull mode, suggesting that the uptrend is to the upside, currently on a sell signal. Notice also that this potential bottoming action is occurring along the lower median line of this. This is a Schiff pitchfork, and that level has provided support before. We can see, you know, multiple bars there where this level provided support, and here we are again. And so anyway, potential bottoming action. Oh, what are the talking heads talking about with interest rates? I saw references to QE, more talk about, you know, Fed's going to drop rates in 2024, still questioning how big those drops will be next year. But then we had a bullish jobs report. And then I started seeing talk of, well, how can the Fed drop interest rates when the job market's so strong? And what I would say is the same thing I've said before. All of the statistics that come out of the BLS, just pure bullshit. And so don't invest based on the statistics that are provided to us by the BLS. It's all manipulation. It's all lies. Just, you know, take it with a grain of salt. If you're an active trader, learn how to trade around those news releases. The markets react to them. And so if you're an active trader, it makes sense to, you know, take advantage of those news releases and try to make some money with them. But so anyway, that's interest rates. Here in the daily time frame, we can see there's that big pullback, bounce from potential support level. That's the 200-day moving average. pushing up into resistance at the 20-day moving average and currently pulling back a little bit. Excuse me. MACD reached oversold level, and notice that we've gotten price turnarounds from this level of being oversold in the MACD twice in the past, and here we are again. So not a bad level for yields to turn around and head higher again. And of course, that's my expectation, is that, as I've said multiple times, we are in a multi-year uptrend in interest rates. Interest rates will head higher for probably the next 10 years, maybe 20 years. You know, that's just what I believe. Obviously, all of us need to form our own beliefs when it comes to the financial markets and how we invest in them. But that is my belief, my bias, multi-decade uptrend in interest rates. There it is. What else can I say? So let's talk about the US dollar. This is another market that influences the precious metals. Got the dollar has pulled back again to a potential support level, appears to be turning up from that level. Based on Fibonacci, we got 62% retracement. Currently, prices pushing up from the 40-week moving average and pushing up towards resistance from this. We got a horizontal support resistance zone. We've got the 10-week moving average. So pushing up into resistance, still in bull mode, currently on a sell signal, but in bull mode, suggesting that the uptrend in the US dollar, the primary trend in the US dollar is to the upside. Energy currently low. And there again, my bias in the US dollar is towards higher levels. Regardless of what is happening with fiat currencies throughout the world, the US dollar continues to be the cleanest shirt in the dirty clothes hamper. And so not unreasonable that as financial markets deteriorate, money will flow into the US dollar. And also as the global South, which, and of course, we're talking about BRICS, SCO, BRI, etc. As the global South bails on the US dollar, those dollars are going to flow back into the Western world and quite likely will push the dollar higher. And so anyway, multiple factors that are likely to push the US dollar higher, even though we might think that it should be going lower on weakness for multiple reasons. But anyway, that's what it is. So again, my bias in the US dollar is towards higher levels. We'll see. This is gold in the quarterly. We looked at this in the last video. And I just want to, again, with the action of the past week, which doesn't feel good at all, this chart, when we pull back to the big level, this chart reminds us that gold is at new all-time highs, and in my opinion, will continue pushing higher. At the same time, we have a multi-decade trend higher in interest rates. I'm expecting a multi-year at least, and potentially secular, which, secular trends are 10 to 15 years in length. So potentially a decade or more of higher prices in precious metals. So anyway, this is a feel-good chart, if you will. MACD in bull mode on a buy signal. So higher prices to come based on this quarterly time frame for gold in the US dollar. This is gold. We're going to look at both COMEX and spot. COMEX in the daily time frame, there's the big push. That was a high of 2152. So this is February contract, 2152, and then we get the big pullback and the smash lower. Now, whether it's manipulation or just active trading, everybody that's paying attention to the precious metals markets knows that this is not an uncommon pattern. Push to a new high, big smash down. And so, trading the market with the expectation that that was going to happen is not unreasonable. If you're conspiracy minded, it's also not unreasonable to think that, on Friday afternoon, traders at JP Morgan were having a cocktail over lunch and they were saying, I think the new target for gold is probably about 1980. And the new target for gold, for silver is probably about, $22. And hey, how's your kids doing in that new play? Or how were their grades on the latest exam? And anyway, is that manipulation? Is that JP Morgan just having conversation over lunch and drinks? Call it what you will. And of course, calling your buddy at the hedge fund and saying, hey, I heard a rumor, which what's the blue? Oh, I can't think of the name, but anyway, the way rumors spread on Wall Street. Anyway, enough suspicion, talk of potential manipulation in the precious metals. But anyway, big spike to new all-time highs, elevated geopolitical tensions, big smash lower, currently sitting on potential support level at the lower median line of this shift pitchfork. Would not be surprising to see prices push lower all the way down to this next level is 1977. And again, we're in the futures market, which would be coincident with 50-day moving average. Notice as well, that on Sunday night a week ago, as we pushed up into this new all-time high, price had also become very overbought, extremely overbought, based both on price action and on MACD. And so there again, just an opportune time as an active trader to take advantage of this spike and sell it. Not only sell the high, but continue selling to drive the price as low as possible, which of course is what we're seeing currently. So, albeit MACD is still in bull mode, which again suggests primary trend is to the upside. We can also see, notice that technically price is still in an uptrend. Low, high, higher low, higher high, higher low. Even if we pull back all the way to the 200-day moving average, that will still be a higher low, assuming that price turns back up from that point. So point is, price is in a technical uptrend at this point. Let's keep rolling. This is gold in the daily spot prices. Price has pushed below what could have been support at the lower median line of this shift pitchfork. Let's take a look at the mod shift. Nope, that's not good. So push below potential support there. This chart would make me think that price is going to pull back at least to, in spot gold, this would be 1965 or so at the 50-day moving average. MACD in bull mode on a sell signal, energy very low. Again, technical uptrend based on price, low, high, higher low, higher high, higher low. Gold in the weekly time frame, these are spot prices, all-time high, pullback. Let's not spend a lot of time here. Gold in the monthly time frame. This is still looking good, even though we've got this big pullback. Price so far is above this horizontal support level, potential support level. So even as bad as that action looks and feels, we still have a potential that this breakout, this is the neckline, if you will. There was our breakout last month. The breakout is still above the breakout level. That may change. MACD in bull mode on a buy signal, energy very elevated. So this is still positive action in the monthly time frame, and we still have a valid price target up at 25.60 or so. So not bad action in gold. Silver got beat with the ugly stick, fell out of the ugly tree and hit every branch on the way down. However you want to look at it, this is not pretty action in silver. And this is futures, February contract. It appears that we have pushed through potential support here at the 50-day moving average and continuing lower. MACD in bull mode on a sell signal, energy very low. If we were looking for potential support, have to go all the way down here to, basically 22 as a round number and a horizontal support level. So my target in the futures contract here would be 22. This is spot silver. We've got support at this horizontal level, potentially sitting on support already at the lower median line of this modified shift pitchfork. We'll see if that holds. Next support level, just a little bit lower, 22.60, down potentially to the bottom of that range is 22.30. And maybe a spike down to the round number at 22, just because we're that close. Get a spike down and then a bounce back up. MACD in bull mode on sell signal. Notice as well in silver that price had become very overbought based on MACD and based on price action. So not surprising to get a pullback from that level. Silver in the weekly time frame, sitting on potential support, albeit we lost support at the 40-week moving average. It appears that we're currently bouncing off the top of this horizontal support resistance level. MACD in bull mode on a buy signal. Mining stocks, obviously following the price of the precious metals lower. That's not surprising. Daily time frame have dropped through the 200-day moving average, potentially bouncing at the bottom of this horizontal support resistance level. MACD in bull mode. Again, the mining stocks had become overbought based on both MACD and price. Not surprising to see a pullback. Energy very low. Weekly time frame, potential support at the 10-week moving average. MACD mostly in bear mode, albeit on a buy signal. Energy elevated. Mining stocks in the monthly time frame. again bounced 2 months ago off the lower edge of this upward sloping price channel, and appears to have had found support there and continued higher. Is currently higher than that level. MACD rising, currently in bear mode, but on a buy signal and rising. Energy above halfway. That's all I got in this video, folks. I'm going to go take care of my voice. Price action doesn't feel good at this point, but don't give up hope. And a question I would ask is, where else would you put your money at this point? If not in physical precious metals, where else can you safely park your money right now? Now, we could put it in short-term treasuries. Currently, we can get, this is the 10-year at 4.2. So if we looked at the 3-month, we're probably still, in the high fours. That's pretty good interest rate at this point. Treasuries, in a 30-day or a 90-day treasury, that's not a bad place to have money sitting. I would not be sitting in stocks. If you're watching the news flow, one of the things that came out yesterday is that Congress is talking about illegal activity in the crypto markets and how they need to regulate those markets, and notice that is occurring at the same time that Bitcoin has pushed up above, pushed from the 28,000 level up above 40,000. And then Congress decides that, well, we need to regulate crypto. My point here is the central banks and governments are not going to allow Bitcoin or any of the other crypto tokens, currencies, to compete with their CBDCs. And so if you think that crypto is a safe place to park your money, I wouldn't try to dissuade you from speculating in crypto or putting a small amount of money in crypto, but I would do so very nimbly. Be ready to move your money in crypto and watch the action there closely. And again, the central banks and the governments are not going to allow competition for their CBDCs, which of course means crypto, Ethereum, etc. So anyway, that's enough of me babbling. Folks, I will talk to you soon. We're headed into Christmas. I hope you're enjoying the holiday season. I've got snow outside the window in this part of the world. It's been cold. That's probably part of what's going on with my voice. I will talk to you soon.